All right, guys. This is, if you've never been to something like this, order flow patterns, it'll illuminate you. Now, there's some guys in our community that are here today. I'm going to record it for those that are watching this in the future. You already know that. But here's the top line here. When anger is the emotion that gets you confident, you're in trouble in anything in life, including trading. And I just thought of this the other day. So it's like, when you're working with people, what's their pain point? And it's like, I miss a trade. I miss a trade. Those were both winners. I'm not missing this next setup. You take it, and that's the loser. If you're taking all three, you're up money. But you took the one that's the loser. It happens. Sometimes I'm guilty as charged. But don't let anger be the emotion that moves you. You're going to do something you regret, whether it's in trading or in life and everything else. So I think that's relevant because it addresses a pain point. But now, how do you solve that pain point? And I'm going to get into that to recognize one thing, the benefit of order flow, correlations, but in this webinar, order flow, the benefit of order flow is fighting for location. If you could get better locations, to get long, to get short, everything else takes care of itself. It's easier to manage your risk. It's easier to maintain your good psychology and everything else. If you don't know anything about me, I began my career as a CME clerk. It's now the CME group. It was just the CME back then in the mid-90s. Became a Board of Trade member in 1999. Trade Dow futures. Couldn't make any money. I was just telling this to people before I started. I couldn't make any money in the pit. I was in a dry liquid pit. Ready to quit the business. Got a job at ITG International Trading Group in 2000. April of 2000. It'll be my 20th year of screen trading this April. And I created the Edge Trading Group, ETG, after many years of collaborating not only with guys that I traded with in the prop firm electronically, guys that I remember from the floor, and then after that with some collaboration I did with Market Delta and software, just understanding people and traders that don't know what they don't know. Some of you are that, some of you are just started, some of you've got experience, but there's always void in what you're trying to learn. But everybody, when they get started in this business, generally go the wrong way first, and it's not their fault. All right. And it's because you don't know what you don't know. And I came up through where professionals did it. When the floor was around, it was the floor. Electronic trading, this business transition to it was prop firms. So if you don't know what a prop firm is, I got webinars on that. I don't want to get into it, but it's the venue of professional day traders. And I got hired by one in April of 2000, ready to quit the business in late 99. My girlfriend, now my wife, says, stick with it. I'll, support you. She was 23, we were 24. She bought me 6 months, which bought me time, which bought me an introduction to a risk manager who worked at a prop firm, hired in April 2000. So the funny thing about it is I still lived at home, and my dad, was getting home at 11:30. She said, what the hell are you doing over there? After 6 months, I was making more money than him, going from ready to quit to making more money than him in 6 or 8 months and home by 11:30 because we only traded the second half of European business day, like from 7 a.m. till 10:30. Quite a turnaround. Now, the why. I talk about, if you don't know the why, the how, the what, the when doesn't matter. The why. What is the why? It's order flow. But before I tell you that, I always start many of my webinars off with my family. So I talked about my dad. There's me in the left. There's my dad. This is, I think, last Christmas. And all my goofy brothers and sisters around us. I show this family picture because my dad told us all, I'm the youngest of 8 kids, he told us growing up, if you know how, you'll have a job, but if you know why, you'll be the boss. If you know how, you'll have a job, but if you know why, you'll be the boss. And the why is order flow in why price moves. I'm going to explain it as we go through this webinar. And by the way, this isn't going to be a very long webinar. We'll leave time open for questions afterwards. But it'll be to the point and something that's really important. Order flow is the why. Now, order flow is a buzz phrase in this business. You do a Google search on order flow and you'll find or YouTube search, you'll find everybody and their cousins teaching order flow. What's important about order flow is what questions do you ask? I'm going to get in it. What's the important question to ask with after you see certain things? All right. Order flow is, again, tracking buyers and sellers. And we'll get into that important question. All right. What we're going to talk about in the next 20 minutes are these 3 order flow patterns that order flow kind of makes up, right? How people get trapped. One of them is, I'll talk a little bit about when people go buy a car real quick to really hone in on what order flow is. But one of these patterns is a long up-down bar. Head fakes and where the stop started are the other 2. All right. And then I'm going to show it to you through images and articulating with my pen on this, not articulating, but illustrating with my pen on the screen. But then I'm going to show you charts from today. We're going to pick up cherry patterns. We'll find them in the market today. All right. From the S&P minis or any market you guys want to look at. I have my charts. I'll always open and we'll go to those. All right. So let's start with what the heck order flow kind of is. I'm a big analogy guy to teach, and I think that helps convey the point the best. If you go buy a car, first of all, when you bought a car last time, do you go in with a Fibonacci chart to negotiate price, or do you show them point of control and volume profile areas to find a good price? Of course not. There are two things that are important in finding a good price for a car. Correlations, which is compare contrast, but order flow. Now, correlations is easier for us to get when we buy a car because you compare it to other dealerships. So order flow isn't. So you got to know when you're going to buy this car, maybe your cousin's the salesman. Now, the salesman has the information potentially to tell you, don't buy the car today, come back next week. We're getting a glut of inventory tomorrow, and they weren't expecting it. We're getting all these cars that we weren't expecting. So are you going to get a better price next week or today, next week, based on order flow, inventory? So your location and your timing is going to be better because you knew someone who had more information than you had that inside kind of track. It's important. It's important you understand that there is an edge. That's the way the name of my business has always been, the edge, because that's a word synonymous on the floor in the prop firm. What's an edge? You have to have an edge. You have to have an advantage. So pattern number one, long up, down, or long down, up. In this example, it's a bar that goes up quickly but down quickly. Why does that work as a transitional moment? And what do I mean by a transitional moment? What I mean by a transitional moment, number one, is I use this phrase B to B. I want you guys, if you don't remember anything from this webinar, you know B to B stands for bullish to bearish or bearish to bullish. Bullish meaning, well, I think the market's going up. Oh, to bearish means now I think it's going down. What's the transitional moments that you could see a market turn, because that's where opportunities lie. Those are where good locations are. And how do you see that in a pattern in a chart? So B to B moments are transitional moments where everybody thinks it's going up. No, it's not. It's going down. But before it's too late to say it's a B to B moment, where up here maybe could you have been able to see a transitional moment? Because once it's down in here, it's too late. And many people aren't realizing it's bearish until it's already bearish, correct? So B to B, you'll hear me maybe use that acronym. That's what it stands for. But a long down up bar is, and I'm just going to use arrows. This could be a candlestick, it could be a footprint, it could be a bar. Price goes up, accelerates up, and accelerates up kind of fast, right? What happens when a market rallies to people who really, and there's a ton of people who don't know what they're doing, just like there's a ton of people who are playing cards in Las Vegas and have no idea how to play poker, and they're just donating their money, right? Same thing in trading. A lot of people with a lot of money are just thinking it's easier than it is. You guys don't, that's why you're here. But there's a lot of people donating. So when price goes up, everybody mostly that doesn't know what they're doing, hey, I want to get long. I want to buy it. I use the image of a kid because kids, they're innocent, but they don't know any better. If I have my 8-year-old, 9-year-old son come in here and say, hey, what do you want to do with this price? Why not buy it, Dad? All right, well, that's fine, but he goes cries to his mom when he's wrong. He has no good risk management skills. That's the problem with most traders. They don't know how to get out of losers. So transitional, long bar up, and you get everybody to say, let's buy it, let's buy it. And that might be fine. Maybe there's a pullback, you buy and it goes up, good for you. So you get all these children, these kids, laying bids. That's what every one of these images are bids laid in the market. It's come back down, I'm going to buy it. I bought a pullback. I seen a video to say buy pullbacks. And they all bid it, and the price goes right through their bids. A lot of people get long and take pain immediately. How many people in here have had trades? If you've traded for 5 seconds or 5 years, you'd raise your hand. Don't raise your hand in the room. Just give me a yes in the chat box. How many times have you you've had in your career, not how many times, but everybody feels like I put on something and it goes immediately against me. No matter your experience, if you trade, it all happens to everyone. That feels like crap. When it happens to a lot of people, that's a transitional moment. There's not worse than if I just canceled that order, I'd be in so much better of a spot. So when you get a lot of kids that are uneducated, when I say kids, they have an excuse to be uneducated and cry to their mommies. Traders don't. Adults don't. So all these green images of kids are bids that get long. Now what do they say? Let's sell it. That's what I want to do when I get long and I immediately take heat. I'm like, oh, I'd like to get the hell out of this thing. Get me out, right? Isn't that what you guys think? That answer every time that this, anytime you get long and immediately take pain, immediately take heat, you want to get the hell out. So what do? Well, you're no longer bidding, right? Because you already got filled. So get rid of those images. Now you are offering. And where are you offering at? I guarantee you're offering close to where you got long. So is everybody else that feels that pain. Because if the market gives you a chance, throws you a lead, throws you a lifeline to get out where you had started all this pain, you're going to try, and I say try to take it. Think about that for a second. You just got long, immediate pain. You're telling God, I won't do this again. Just let me out. So when the price comes back up to where a lot of people are stuck long, you got a lot of resting offers. And the price has a tough time going through there. And therefore, it probably is then going to shoot lower. And why? Because these images are a bunch of offers, but they're not just sellers. They're emotional sellers because they were created from getting long on the way down here and taking immediate heat on that position. So not only are they sellers, and not only are they emotional sellers, but they are sellers that have to sell. Not every seller has to sell. If I want to sell to get short, I could change my mind. If I got to sell to get out of a long, I got to do it at some point, right? And as a day trader, most of us are, and most people watching this would be or are going to be or already are, they are day traders. If you're long, you are a seller today. So not only are they emotional sellers, but they are sellers that have to execute and get out. Again, when this dynamic exists, you get a lot of people stuck long, and now they're trying to sell to get out. It's hard to get through that area. And then what happens? Why does it start to curl and go lower? Because one guy says, the hell with it, hits it. Another one says, hits it, hits it, hits it. Think of a crowded room. Everyone's looking at each other. When the price comes back up to let people out of that painful long, they're all looking at each other in a way. If you think about a crowded room, first guy to the exit, second guy, and then they chase it lower. So a long up bar followed by a long down bar and a short periodicity, short time frame, generally creates a probability for B2B, bullish to bearish moment. Bullish to bearish moment. Can you find this pattern and just make all kinds of money in and of itself? No. But boy, to qualify a bearish idea setup you already have, it's going to help you miss less winners. Fight for location. It's the theme of this webinar. How do you fight for your location? If your setup is bearish and then you see this pattern, all of a sudden you got a ready aim fire that strips out randomness. Now you're thinking like a trader. You're thinking like a hunter instead of the deer. And people don't get that. Most everybody who finds me, joins our room and everything else, say, I join you because you're different than anything else I've seen out there. I'm different maybe from everything you see out there, but not from prop firms, because this is how I learned it. And it cost me a hell of a lot more money than it would anybody else when you invest in education. A hell of a lot. I was on a 50-50 profit split for 3 years and then 72-28 after that. I'm not bitter about it, but it's important to note there is no free, good education. 50% of a lot of money is a lot of money. But going back to this saying that I want you also to remember, or upper right-hand corner after you buy it, you're a seller. What it means is after you buy it to get long, like these children did, after they see it go up, they're trying to buy it in here. Up, SHIT, let's sell it. They're all trying to sell it in here. Price can't get through that area, dips down. So if I were to draw this, price goes up, price goes down, little pullback, continues down. Kind of looks like a trend, doesn't it? Now you're starting to understand why trends are trends, in a way, and early into transitional moments instead of saying, I think it's pretty bearish down here. Yeah, guess what? So does my 9-year-old son. You got to get the bearishness thought in here rather than down there. After you buy it, you're a seller. After you buy it to get long, that means you are a seller. Again, the saying that by far, every time I say it, I say this, by far resonates the most with anyone that hears it. All right. So the other two patterns, this is called long up down bar. Same thing, and I don't want to confuse you, but there's such a thing as a down bar, obviously. And everybody's bearish. They want to sell it. They get short. And then the market runs up and they stick all these people stuck short. After you're short, you're a buyer, right? You got all these buyers stuck here. It comes back down. Just the opposite of up down. All right. Now, the second pattern is head fake. I'm going to abbreviate it. HF. Head fake. Now, people in my room, they come in here because repetition is key to understanding anything. You can learn anything once, but to understand it, you got to repeat it a couple times. And it always helps to have someone that could draw these metaphors and analogies, because there's some webinars and boring people out there. And so people could say a lot about, they're going to call me boring. And it can't be boring. You got to have this as part of any education. You got to laugh. Or any group has to have a laugh element to it. So a head fake. What is a head fake? Let me draw the pattern of a head fake. Just watch my yellow pen. All right. Now let me clear that and walk you through it. Markets have consolidation boxes. I'm going to show them to you on a live chart in a moment. But every market, if you're just starting, the first way I would teach you to read a chart is follow these, understand these consolidation boxes and put a visual box around them. Inside ranges, chops, consolidation, all those words mean the same. There is a fight. Sometimes you're part of that fight. There are people who are long and people who are short in this consolidation. And if you're long, in, out, you're probably getting what we call chopped up, right? When you recognize a consolidation box or chop, it's going to break out sooner or later. On slow days, it takes longer. On fast days, there's more of them, more breakouts. But they're going to break out. Your job is to first identify the box and then look for the opposite of everybody else. Everybody else wants to see a breakout, sell it. It's going to go down. Great. If they're right, they're right. Chances are, if they're right, they missed it. But when they're wrong, they got it. And the head fake is they fake to go down and jump back up. And usually when they clear the middle, and the middle matters, the follow-through is easier. And I'm going to give you the equation of why the follow-through is easier based on order flow and people getting stuck and putting what they put in and how they chase it. And that is, when you have, let's erase this again. When you have a box, consolidation chop, and you go down, I could tell you for sure two things happen. Number one, people were putting in their orders to be short, momentum shorts, and those that caught it, whether they're in here, or late, they're getting short, remember? All right? They're happy if it keeps going lower. Are they unhappy if it jumps back up? Of course they are. So momentum shorts or shorts in general are pissed because it was going down and it jumps back up. And now they're like, are you kidding me? What are shorts? Open shorts are what? Buyers or sellers? The buyers. I don't know about you, but when I'm short, I'm a buyer. I'm a buyer below, hopefully, but I'm going to buy. I got to buy it sooner or later. So more shorts, more buying, number one. That's number one. Number two, what happens when this market, let's erase this a second, chopping around, shoots lower? One thing for sure, not all, but a lot, some, many, longs in this box, could be you too, get stopped out. How many people use the bottom of a swing low or the bottom of a consolidation box to put a sell stop to exit along? How many people do that? Put a yes in the box. And if you don't put a yes in the box, you're a liar. If you put a no, If you don't answer, I'm going to pretend like you just didn't hear it. But if you put a no, I never do it, you used to. You might be right. You probably don't anymore, but you used to. And there's nothing wrong with doing it from time to time. There's nothing like, are you crazy? No. But it makes sense. The point I'm trying to make is it makes sense. It's an obvious place to put a sell stop, right? Obvious place to put a sell stop is the below consolidation box. So longs are the ones putting sell stops in, right? When you're long, you got a resting offer above, and you probably got a sell stop below, and they're attached. When one gets filled, the other one gets canceled. But you don't have to even know that much at this point. All you have to know is that longs are selling or are sellers, and they probably get knocked out of the boat on this push lower. So what happens when you have less longs? Follow this equation. When you have less longs, you have less sellers above, don't you? So let's say all the people long in here in this chop had offers above the market in here, all right? All these are offers, all these little dots. But when the market gets hit lower like this, they all get stopped out. They're no longer long. Then look at all these yellow dots and X's. They all get removed, don't they? There's less sellers above when there's less longs in the market. Less longs, less sellers. So the market, when it comes up, it's got less resistance to navigate to the upside. So it's easier to push the boulder. Gravity is helping you. You need less selling above in order for price to be able to move. You know, so that's a head fake. The pattern, again, is sideways, shoots lower, but then in some pretty quick form comes right back to the box. You pissed off a lot of longs because you shook them off and you made a lot of shorts nervous. You got less sellers above and you got more buyers because you got more shorts. Does that make sense? So this is the pattern. And again, if you know this pattern and it's all you play, could you make $1 million? No, probably not. But this is the probability to qualify your opinion, not be part of the head fake to start. So if you're reading charts like crazy and you don't know a couple of these, then you're not truly trying to catch the market at the turns. And the turns is where the money is. Turns are transitions, transitional patterns. And when they're based on orders and in the flow of people's positions, all of a sudden, randomness goes away. And anybody with any kind of consistent profitability doesn't have a lot of randomness. There's nobody who's successful in randomness is front and center in any business, right? You have to know, going back to the word why. All right. So that's the head fake in a sense. I'm going to give you a quick metaphor. I didn't have slides, but I'm going to just draw it. When you have a boat and you have 100 people, let's say each person here is 25, represents 25 people, right? There's 100 people on this boat and it's starting to sink. It's starting to sink. And someone yells off, if we throw off 25 people, we'll float and the rest will survive. Guess what? You got to shake them out, don't they? That's why markets go up, because you shook out longs. They go down because you shook out shorts. If there's too many longs in the market, it can't go up. You got to shake out those shorter time frame longs. And that's what? Sometimes it overcompensates. So instead of throwing off 25, you might throw off 50 before it calms down, and the other 50 say, okay, that's enough. We're starting to float. Good. There might be some strong guys that find themselves at the edge of the boat. They get knocked off. But for the most part, most of the people knocked off are weak. They're weak. Same thing in the market. You got to shake out the weak players. A small account size doesn't make you weak. A small understanding of price fluctuation makes you weak. Not knowing your exits before your entries makes you weak. Not understanding this makes you weak. This might seem advanced to a lot of people, but it isn't to guys in and of a prop firm. Even from the floor, this is what we learned by default right away. Last pattern, and then I'll get to some questions. Where the stops started. This is similar to both where you got, or to the head fake, where we're always trying to find with probabilities and accurate assumptions where the stops are. All right. So if, for instance, the market has a swing low, you guys agree that there are probably a lot of sell stops underneath here, right? And I'm not saying don't put your sell stop there or anything else like that. What I'm saying is, if indeed there were a lot of sell stops there when the market hit them and triggered them and went lower, generally that's going to be great subsequent resistance. All right. Where the stop started is going to be, that's why it's called that. Where the stop started is going to be a pattern that'll help you find great and the best resistance of all time. Because remember, this is all about support and resistance, these patterns. Do you know what you need for resistance, by the way? Stuck longs all trying to get out in a small area. The best resistance is always stuck longs trying to exit with a sell order in the same area. Because not only does it stop price from going up, but it gets people who are selling it that stop it, that start reaching, and makes it go lower. So for resistance to be good in this business, you need it to stop price and push it the other way. That's what stuck longs all trying to exit in a similar area do. That's a definition of resistance. Anybody else that tells you anything different, I would tell them, I don't think you know what you're talking about. Yeah, once in a while, there's great lines at work, but the dynamic of what I just said has to be there. So let me tell you this, where the stop started. Generally, you get the market to pick up speed where there's a lot of sell stops. But why would it be subsequent resistance after it pushed them all out and kept going? We talked about the head fake. It pushed them out and jumped back. This one, it pushes them and keeps going and follows through. Sell stops. Sell stops get who to exit? Longs, correct? When your sell stop gets generally gets triggered, I know you could use sell stops to get into a short. Just stay with me on this. If a sell stop is executed to exit a long position, then you're no longer long. And then you see price go lower. What are you saying? Whew, good exit. Nice job. And that's fine. That's good. How about the guys who didn't get out there? And here's what's key about the stops started and the rush, the tempo picking up. When the price moves lower fast, all right? When it moves lower fast, let's say in that box right there, who missed selling it? Or I'll give you the answer. Who missed trading it? Buyers or sellers? Sellers, because it went down fast. If it went down fast, buyers still could buy it lower and better. Great. But sellers miss selling it, correct? So if you're long and stuck and it gets really fast to the downside in this box here, and you didn't have your sell stop here, and now the market followed through, put a tremendous amount of more heat on you, it's coming back and you're on your knees saying, God, I will put my sell stop in below a swing low from now on. Just let me out of this trade. And you're this X. You dealt with all this pain. You wish you would have got it there where the tempo picked up and other people might have got stopped out, but the speed went down fast. And where the speed goes down fast, generally is great future resistance for that reason. People on their knees. And there's been times I've been that guy. People are on their knees, and you think it was Christmas Mass. Nope. It was a bunch of people didn't have a sell stop in, didn't know how to get out of a loser, felt a lot of pain, and now it's coming back. And you know what they do? They don't just want to scratch. They want to break even plus one. Hey, I took all this heat. I got to take my little money on this. That's the most uneducated person in the world. The best trade you could ever make are small losers because you don't care about the scratch. You care about the trade, the exit, the health of your objectivity. But so you understand why when the market moves down fast, where it moved down fast could be subsequent resistance. Does everybody understand that based on this explanation? All right, good. Some people are answering. Hopefully, if you're not answering, it just means you're not going to go to the keyboard. But you guys get that. Is there any questions on this before I go to the next slide, which is about the Edge Trading Group? Then I'm going to go to live charts. So you guys understand this, right? Does anyone not understand it? Let me ask it that way. Does anybody not understand just this question? When a market goes down fast, the area that it went down fast in, does it make sense why it would be subsequent resistance? Because people miss selling it in that uptick of tempo, which I developed. And I'm not the smartest guy in the world. I'm just smart enough to know that. I developed these edge zones and just based on tempo, and I wanted them to easily go on my chart because those are going to be the best. I want an easy visual to find where people are getting stopped out. So a better way to see the same thing has always been my MO. As I started to get into the education, which I backed into, it's like concepts of order flow and correlations are how you value price, right? Price of crude oil, price of the S&P minis, price of a stock, price of a car, price of a t-shirt. So if you're not using those two concepts, you're ignoring the two concepts you've used your whole life as a consumer. You've got to embrace those two concepts as a trader. One or both of those concepts have to be prevalent in your strategy building, in your execution, in your risk management, in your probability predictions. If not, you're doing opposite or different. You're not using Fibonacci. You're not using market profile, which they're fine. There's some good value from those things. But you're not using those things to negotiate price at a car dealership. You're not. But you are. They're using order flow if you could find in what their inventory looks like, and you certainly could look at market correlations. And don't tell me you don't when you go fly on an airplane. That's all Travelocity and Orbitz do is they give you the opportunity to easily compare contrast to find the cheapest airfare. How many people bought the most expensive airfare on Orbitz? Apples to apples. Nobody. Unless you have points or something someone else paying for it. But United flies 800 and American Airlines for 400. Compare, contrast. So going back over a question and a comment here, it's a good one. Sellers that were not able to sell will try to sell if they get another crack at it. If they get another bite at the apple, they're going to try to sell it where the pain started. Great question. All right. The assumption also is they're probably still long. A lot of people are still long and had to feel all this pain down to wherever it went down to. Had to feel additional pain. Sellers that miss it to get short are mad, but sellers that miss it to exit along and take additional pain are really mad. All right. Does that make sense? They get another bite at the apple. They're all sitting here like baby birds. And I'm not going to tell that story today, but it's on the website. 5-minute video of the baby bird story gives you another sense of why resistance is the resistance and good support's good support. All right, so those are the three patterns. Long up, down bar. Then here's the head fake. It's going to go down. No, it's not. So it's going to go up. How could you predict it before you see it? And then where the stop started. When you get, a follow-through move, picked up speed, you got some people that got stops that got triggered. It's going to be probably good subsequent resistance, and there's no randomness to it. It's not just a Fibonacci 618 retracement that's you're clinging your hopes to a trade. I'm getting really cheap airfare, Jeff, on the 737 Maxes. They're paying me to fly. I don't know why, but they're giving it they told me they'll pay me $100 to fly. So I'm going to take them up on it. All right. So if you're brand new to this webinar and this stuff, you don't have to understand it like I do. It's got to just don't click and make sense. I could see why that would help me read a pattern as it's developing. And remember, no pattern is worth anything if you don't recognize it until it's clear. You got to see it as it's developing. And also remember, this is important. I'm going to draw this. The circle. of skill. If you have a strategy that's decent, or you build it through what I teach and what we have, you need this other skill to overlap it, and that's where your location is. Your good location, your good spots, your good timing, which makes your risk easier to manage. It's that overlap, that's where your edge lies. Everybody is just looking for a strategy. You got to have location to that strategy. If you just had location, you're better off, but you still need a good sense of where the market's going. And if there's daylight between what you think and where the qualifiers are, you shouldn't trade. Got to know that also. But you want to put yourself in a position to find an overlap of skill. And the skill set is the ready, aim, fire idea. I'm not teaching this all in this webinar, but the best ways to create an opinion and the best way is to execute it. You don't have to reinvent the wheel and have someone show you exactly how to build a strategy. You need someone to help you qualify that strategy and fight for that location. That's the difference between me and most of the rest of the people who try to teach you it. They're going to tell you, this is easy. Do this when this happens, and then that happens, and then do this. No. Good luck. You have to make sense out of it. It has to be like, I'm going to play this from the long side. I'm going to play this for the short side. This is a head fake developing. I'm already bullish. I'm going to take a shot. I'm going to get out underneath here. But you just explained it. So someone who doesn't know about trading could kind of understand, yeah, I could see why he was long. All right, let's go to the next slide. Before I go, I want to show these on today's price action. These couple of these patterns on a real chart instead of just arrows and stuff. But I want to tell you about the I've been educating for 7 years, but I backed into it. A guy from the floor would send guys to me at my office, and they really liked it, and I really liked it. And then Market Delta asked me to do a room, and I said, I'll do a room, but it's got to be my room because I can't work for someone. And they had great software. Sierra comes along, and you don't have to have Sierra. You don't have to have Market Delta, but Sierra's got nice footprints. If you're familiar with footprints, I think they're important. And I've been able to kind of drill down on what's most important with footprints to read order flow. How many people here are familiar with footprints? You don't have to be, but it's a better way to read a chart. And I've qualified what's important instead of just a bunch of numbers on a screen. Because the first time you've seen a footprint, you probably looks like a bunch of numbers on a screen. It looks like I'm missing something, but what the hell are they? You don't have to analyze all the numbers. I made them easier with edge zones. I made them easier with the program I put out and make it really easy for people to understand this in a daily environment in the trading room, in a weekly environment in coaching sessions. And I've been doing it for 7 years, and it was just a trading room for $99 a month. And I said, you know what? I'm raising the price, but I'm adding a bunch of education, and I'm adding a weekly coaching session along with a daily room. But I'm going to keep it until the end of the year at $99. What do you get out of it? First of all, you go from this guy to this guy. You got to fight for your location and know what the hell's going on. The benefit of order flow is location. Forget everything else. Qualification. Miss, catch. No. You caught it. Maybe you missed the losers instead of missing the damn winners. Order flow is about location. And so in this package, it's a whole order flow program that's laid out sequentially. You're reading or you're learning things the right way. But then the meetings, a place for more Q&A and content. I've been doing them for 5 or 6 years, and it's really created a great repository of organized everything about trading. Although this Edge Pro subscription is about order flow mostly, correlations, there's some psychology in it. There's a lot of comprehensive stuff in it, but I've added some order flow stuff to it to really highlight what you really need to start, whether you've been reading and understanding order flow or if you're new to it. The daily trading room, yes, that's included. And it's $147 a month, but this is a discount code, 99 forever. Caps on forever. If you're watching this video after January 1st, this ain't going to work. On the website, you're going to see this price. Don't get nervous. Hit the subscribe button. Put this in the coupon section at the bottom. and the price will go to $99 and stay there. And you get all this educational. Here, let me show you real quick. Hold on, Jill. I'll answer that when I show you this. I mean, what is this education? How do I understand it? I can't get it. Nobody's asking me that, but I'm sure you're thinking that. When you come to this site, you will, I got to give myself access to it. I own it. I can't even get into it. So you go to my site. This is what it looks like. Right? You don't see it, do you? Now you do. Take a look at this. This is what the site looks like. After you subscribe and you're given access, you get this Edge Zone boot camp, all about the footprint and the edge zones I talked about. And that's like a real short sequential way to learn anything. You're not watching hours and hours of video. Who wants to do that? You get the trading room access every day. You come in, the execution turns to execution. So as this stuff is developing in real time, the hardest time to understand it is what the trading room is all about. Then a workshop we did a couple years ago, over 3 days. We professionally recorded it. There's market profile stuff in there. Brett Steenbarger was one of the guys on the panel for 3 days, and myself. I'm going to give you all those videos also. All for, yes, Jill, $99. Stays $99 every month. Never goes to $147 unless you do it after January 1st. In the past, I just had the room for $99, and that was super cheap. Now I'm adding all this stuff, so you have a bunch of good education as you're in the room. And you're also reaching a weekly coaching session. So they're private meetings, as if you worked in an office, and you start to develop that group mentality. Because you got to, like when I worked in a prop firm, there were weekly meetings. You need to have that routine and that structure. If you miss it, they're recorded, and we give you access to them. So I think that if I go to here, I don't know if I'm permissioned to it. This is where the weekly coaching sessions that are recorded will be. But you come to the live ones too. So when you're an Edge Pro member, you click here. Here's all the stuff. Lesson 1, 2, and 3. Pretty basic. This is basic. But these two, this third one is where a lot of the meat is. And then here's how you access the weekly coaching stuff. All the recorded ones. And then the live ones you'd enter here on Tuesdays. Every Tuesday at 11 Central. But we don't start until the next new year because of the holidays. So you enter here, and then you could see I'm leaving 2019 videos up for newer guys to be able to go and do it. No, Damien, the price for the Elite's totally different. And you get, I don't want to get into what that is. I tell people, listen, always walk in to a relationship. Do this Edge Pro first, and then I'll talk to people more about the Edge Elite. And then you can make a more informed decision. But that's not a subscription. That's a one-time payment. And that's the way you should do with anything, like with you know what I mean? When you're trading, you trade smaller until you get it and trade bigger. And that's the way I try to work this up in this. This was a previous webinar I did. That's the way I try to do it with the education as well. Now let's go to a live chart. I want people to not spend thousands of dollars unless you know who the hell you're learning from. You come to this webinar, you might think he's great, and I'll do it. No. Do a $99 subscription. Get that information and then say, hey, Anthony, can I talk to you about the elite level? And here's the one thing that I live by. People are kind of surprised that I'm available if someone wants to talk to me. I heard from some guy who promoted Elvis. Important people are important because they're available. So that made me think, if someone wants to talk to me, why would I ever tell them no? So I'm available. You come to Edge Pro and you say, I want to talk about the elite. That's the way I like those people to come in, because that has access to everything I've ever done. And that's got all these lessons laid out, and also access to another room that we developed called the team room, where you could actually talk and listen to other guys. Now let's go to today. They're going to see a lot more edge zones than we normally get because it was slow and kind of compact. But let me open up. This is an S&P chart. Now, there's webinars on PNFs and stuff, but PNFs, when you look at a periodicity, because you're probably going to wonder at some point what periodicity is. Is it a 2-minute, a 10-minute? It's closest to a 2-minute, but it's a point and figure. And all I want you to worry about when you're looking at someone's chart is this: rotation. Think of a bird in the sky. If it left a trail, what would it look like? That's what a chart's telling us. The bird is the price currently right up here, and the trail is obviously the bars. The green that I have coming out is potential tempo picking up for new support. The red, potential resistance based on the market going down fast. So I've taken the footprint and stripped out a lot of the numbers. The numbers are still down here, and I use a chart for it, but I also wanted zones to come out to show me where tempos pick up to give me an idea where people are stuck, like in that previous slide I gave you, right? I'm not going to get in where it turns orange, and I'm not going to get into the edge zones because a lot of that, obviously, you get when you sign up. I just want to stick to the patterns of today's event. And what time is it? This is going longer than I even thought, but that's all right. Head fake happened this morning. We had a live trading room this morning. How many guys are in my trading room that are here today? I shared the link with some of those guys. Even though they would have seen this and learned this and understand this, repetition is the cornerstone of understanding. All right, so a handful. What did we talk about before this move? We talked about, as it developed, a head fake in here. All right, so the whole pattern of a head fake, and I'm going to draw it out in a second. But before you know, follow my cursor, before you know all this upside, it's too late to get long up here. Okay, of course it's bullish when it's up here. How could you know that it might do that down here when it starts to scoop up like this? This is where I came in and said, this is a head fake now, where it got through the bottom of here, gets through the middle of here. It has some really good upside potential. Head fake developing. Let me draw this out. This is the consolidation box, right? Remember the chop I drew like this on that previous slide? That's this right here. It leaks lower, it comes to support, it lines up, and it starts to head up. No randomness to this. When this went down like that, you shook out longs from up here. All right? Less longs, less selling. Less selling, it's easier to go up and through here. So it did. You stuck some momentum shorts. All right, it's going to go down. It's going to go down to here. Oh, no, it's not. And they're the buyers that help chase it up. So when there's head fakes, I talk about them in here, not up here because it's too late. Like double bottom, guys. Here's a double bottom. Tell me it's a double bottom in here, not up here. And then tell me why, you know. And so a head fake, again, here's the box, here it's leaving, and there it's going back up. So long up down bar, I'll show you every turn is going to have. So if you have a turn, not every turn is going to have them, but every rejection low, let's stay on a rejection low because there's a couple that happened through the overnight session. This is the S&P minis, by the way. Happened in here an hour before the open. Any rejection low is going to have this, most of them are going to have this dynamic. And that's what helps you say, is this a low or a temporary low? Remember, you don't have to call a low at a damn day. You just have to say, I think this is rejection. It's temporary, a low. It's a temporary low. I'm going to be careful getting short, and maybe I'm going to think of getting long. But if we drill down into this, you could see how it's a long down. This isn't a long down. It's a down ball. It's quickly rejected. It quickly comes back. So while it doesn't overlap, and it's not that long, but it doesn't overlap, it quickly comes back, giving you a sense of that same pattern of everybody saying, well, it's going down to, oh, it's going up, I'm going to buy it. and it comes down, and that's the rejection. So this wasn't an overlap in a true long up down bar. Why? Because this one, the people that bought it caught it, because they also realized there was a rejection off those lows. And that's how you qualify it. And again, in real time. And I shouldn't have said they're going to buy it. I should say they're going to sell it once it's going down and here and down and here. People stuck selling it with the rejection out of the hole. Now they have to buy it. All this downside you know about. You don't know about this upside in real time. But what you do know about is all this downside, and so does everybody else. So when you get these quick moves down, you get people selling it, and when they take immediate pain, there's just a chance that that becomes subsequent support. This in and of itself doesn't make you $1 million, but knowing it gives you the probability not to get stuck in the hole. Stuck in the hole is just what it would seem like. When you're short in the hole, it means you're short at the bottom, and you're one of the reasons why it was the bottom. Yes, Fran, if you're asking me yes, if you're telling me yes, definitely, especially more volatile markets, rejection and transitional moments. So here's a long, and I like to show there's not the perfect long up down bar every day. Some days there are, but I like to show things that happen today and not just pick out images. I want to show you stuff when it happens, and when we talk about this is a long down bar, and the long up bar never really retraced until here. This long bar not only got long, it totally retraced this big, long, quick down bar where my cursor is, but it kept going. So you really had that trap. You always get that pullback. And why do you get that pullback? You get the pullback because all the people that get short, immediate pain, I'm short, immediate pain. Oh, boy. And all these guys that got immediate pain are now trying to buy it where they sold it. And they have to buy it. And so that's why the pullbacks maybe are shallow, or at some point just have that continuation. Rejection, transitional moments, which is what a long down up bar would be, are moments to get the hell off the wrong side and put yourself in a position to get on the right side. Every, beginning of every strategy has to come with an opinion, but a great opinion doesn't mean nothing. It has to be attached with a great location. Again, going back to those circles, you have to be able to overlap the ability to create a good opinion with a great ability to qualify it. Right in here, I got my pen turns to a cursor and a pen, and then I can't move the chart. So this was the head fake, in a sense, comes down into support, runs up all through, and then we just had this grind up. Remember, it's the holidays, so everything takes a little longer and just a grind, and we talked about that. Talked about your that's the whole part of being in a good community is there's one thing that's the same, is that it doesn't stay the same. So day to day, week to week, you've got to be around people that you respect their judgment, because it really helps for someone to say, take your time today. And we knew that this morning. You shouldn't have a ton of trades. You shouldn't have an above average amount of trades today. It's going to be slow. And once we seen this head fake, it was like, hey, there was a chance that it went up this morning, but it wasn't like, hey, we're going to go up. No, this wasn't a cause. But people who didn't catch this, I told them, I said, be patient. If you didn't catch this and I didn't, someone did. That's a move. That counts. Just be patient. It's going to take time to get something going. Don't be part of the reason why it chops. People, it's going to go up. It's not. It's going to go up. It's going to stay out of that. It's slow. It takes longer for price to move when there's less people getting trapped. All these patterns have to do with trapped traders. So you get this dip down, and it releases the opportunity for it to go up. Now, when we get a breakout where there's tempo, you had it like where the stop started. Let me give you that. This one jumps and it throws out this green bar, okay? That just tells me that the speed picked up in here. And I'm going to show you on a footprint what it looks like. So does it work for subsequent support, this one? Yes. Does this one work the first time? Yes. And I like the green edge zones. People in my room know this, that are drawn across better. So it comes down. There's no coincidence it stopped there because there's some buy stops in this case that came out. So you know the idiot people, and if you're one of them, sometimes I'm an idiot. Don't take offense. But the idiot shorts that are still short from down here that didn't get out, and they tried to maybe get out, or they seen, I wish I would have got out there. It really went up fast. They took all this additional pain up to here, right? They're begging to get out next time they get a bite at the apple. Baby birds, helpless. And that's what helps make it support. So with any kind of support resistance, you put it in context. Are people most likely short or trapped short up here? You're looking for support. If you're bullish, yes. So you're only worried about red resistance, maybe to get out of long trades. But you're using context and what side of the market are you looking for opportunities to buy support? I'm looking at the CL. I got zones for CL, Anita, but I don't actively trade crude oil. There's a lot of people in my room and group that do. It's probably the second most popular market. I do not. Same concepts though. And I'll show it to you on my chart when I shrink this one. There isn't I want to make sure people realize there's generally never and should be this much noise with levels, but there's reasons why they go light, green, and everything else. But you got to understand why they go there before you understand how to use them. Now, here, let me show you this. If buy stops came out here, it means the tempo came out. It was about 04 quarter at about 10:15 Central Time. So I go to the footprint, and now we take a microscope and look inside that time at what time was it? 10 something, 10:15. Do you see this zone has to skip because there's other colors in here, but you see these green numbers here, this imbalance? Forget about this pink. They actually start drawing them right here. There's two, one here and one here. And that's what drew the price around 04 even, 375 and 4 quarter. This one doesn't draw the edge zones exactly in the same spot because it's got a heat map on it, so the colors kind of skip. That's why I've got the other chart. But do you see this in the footprint, how the price got fast in here? How do I know it got fast in there? Well, number one, there were quick imbalances. And there's some simple footprint videos in the program that you'll have with the subscription that you'll know where every one of these numbers come from and why. And you'll understand when they're green like that, that means price went up fast. Not just went up, but went up fast. That's why there's generally lighter volume, or what we call, and you'll get this, a thin spot. A thin spot's an edge zone. Price goes up fast, a lot of volume probably didn't trade there. There's no coincidence that this thin spot worked as great support later on. Stops started. If there's a lot of stops, they usually flicker the market up. And no coincidence it came down here. Also remember this. Look at this yellow line. This is how the market moves. Follow bird in the sky if it left a trail. Rotation. Don't look at these. Your first instinct might be just rectangles with numbers in it. And I don't blame it. But that's not just two rectangles with numbers in it. This is an up bar that went up fast in there, that stopped there, started to rotate, stopped on the pullback there, and walked up through there. So what you're going to learn in this program is not just execution on the education and live analysis, tying in the news, correlations. Hey, oil numbers, it's important to know what API did the night before, but also if you're bullish the S&P and oil spikes at 9:30 on Wednesday Central Time, that's a location moment for a long in the ES. So order flow is half of valuing price. Market correlations and market relationships are the other half. You guys will get that in the videos you're going to subscribe to. And I imagine there are going to be a lot of people in here to subscribe to it, only because there's more risk in not doing it than doing it. If you trade, you're going to subscribe to it. People lose $100 leaving orders in the book, let alone for what you're going to get and the way it's organized, and then the daily access to me. So, and there's no trial. A couple said they are. Who else going to sign up? So I want to give you the link to grandfather you in. Here, instead of each one, I'll just send it to all you guys so you don't forget. Make sure you put this in caps too. It's not the link, but it's the coupon code to lower it from $147 a month to $99 and keep it at $99. I'll give you the link to the site also. This takes you right to the Edge Pro. I changed things up to make it better. I made it, instead of trading room for $99, I made it Edge Pro subscription, and the trading room is just another feature and benefit in the subscription. I added all kinds of education and made sure that you were in. Yeah, Dan, that'd be great. And guys that are in the room, what would you tell people that are thinking about joining? Guys that have been in my room, type in what you would tell guys that were thinking about joining. Someone just said, let me tell them why they should join. So if you want, go ahead and do it. Yes, Anita, but do it now, because then it comes down and you're going to ask me to do it. And it's like, hold on a second. Anita, I just sent you in the chat. I'll read some of those things 1 second. I just wanted to, here, I'll give you the sense of a long up-down bar, in a sense, in a footprint real quick. This is, in a sense, a long down bar compared to other bars, right? It starts to get a little long, but the market goes up and retraces the whole thing. So you get a little dip down and a little move up. I am not telling anybody to trade this as the setup, and you'll be flying 737 Maxes. Actually, you'll be on a 737 Max. You use this as a probability, as a qualifier. Everybody's pain point is this. You miss a lot of winners, hard reading the real time, couple weeks of profits gone in one or two trades. When I'm trading like SHIT, they become my pain points, and then you just got to reset. All right, Anita, look forward to seeing you. Yes, I will. So a couple people that have been in my room come in here, says, what I tell people to join is don't trade without it. Worth hearing a trade analysis from Anthony and also a couple of the team members. I opened up a couple guys, Mike, and so we're just talking about what's happening and what should happen and where to be careful. And this news just came out, or this news just broke. Look for this piece of news. This is a head fake. Buy stops. I'm always calling buy stops and sell stops. I used to, when I started the trading room, and I'll tell you guys this, I used to have all my trades. Everybody knew when I was long, when I was short, they'd see it, or I'd be everything in real time. And what I had a prop friend of mine say is, why do you say that you don't want people to trade like you, but then you tell me everything you're doing? He says, you're right, by the way. No two people trade alike. I don't want to trade exactly like you. But then I know what you're doing. I said, well, I want people to get a sense that, I'm participating and everything. He goes, bullshit. He goes, I get mad when I hear you in real time. I miss something you catch. He says, people know that you know what you're talking about by listening to you, number one. He said, but number two, it's all about real-time analysis and being objective. If you don't want people to trade like you, and you shouldn't, they have to know everything you're doing, and then all of a sudden you're in an arena, and nobody in our prop firm had people over our back yelling out, I'm long 3. I just got out of 1. That didn't happen. It was prop firm banter. But here's what prop firm banter was. Hey, look at the bonds. They just smoked the 10-year. oil just, hey, the 930 oil numbers coming out. They sold it in the API yesterday. You see these big buyers just come in and they couldn't rally it? All things you miss. You miss less. People are stuck short. People are stuck long. That's what 8 a.m. Central Time, Jeff. Alex, yes, I'll record this, post it, Alex, but here's the site. Poke around there. Another guy from the room says, Anthony's always looking for ways to improve your understanding and trading skills. Always a way to, that helps me. If you're not getting better at seeing the same thing, you're getting worse. But you can't keep changing your concepts. So if you look at webinars I did 7-8 years ago, there's nothing different in concepts. There is in visuals. I got edge zone audios where I could hear these tempos changing. I built these edge zones so I could see what I wanted to, what I was looking at 20 years ago, but I could see it easier now. I had these dials built so I could tag correlations better. So I know that the Russell over the last 5 minutes is the strongest. NASDAQ and Dow are okay, and they're all pretty much the same, but there's no divergence. These are the bonds. This is the yen. This is gold. Why do I watch those? Because when these go down, sometimes these go up. Helps me if I'm long to stay long. Helps you to stay long if you're long. Helps to get your ass in a trade, get your ass out of a trade for reasons that matter instead of emotion. Don't let, like I said at the beginning, don't let anger be the thing that drives you to confidence. When anger is the emotion that gets you confident, you're in trouble. To get you long, get you short. You miss a winner, you miss a winner. I ain't going to miss this next trade. Same setup as the first two. You take it, it's a loser. Now you're really mad. 3 trades, all the same. What was the difference? You missed the first two. And Dan said, I'm funny. Thanks, Dan. But I already knew that. I'm humble, I'm funny, and I got nice hair, and I'm extraordinarily humble. I think that what's important in this business, and I'll kind of wrap it up there, is the tagline, laugh, let me bring it in, learn, trade. You could take this word and replace it with laugh, learn plumbing, laugh, learn accounting, laugh, learn medicine. If you could laugh, you will understand and learn more, and then this thing becomes easier to do. So there are song parodies I have. There are, witty banter that we have in the room. We're not silly. We're not whimsical. But you got to have a genuine let your hair down so you could be in a disposition to absorb what's going on so you're not so stressed. But again, it's not whimsical or silly. It's just getting people to be comfortable. Any other questions? Again, on the website, it's $147.99 forever. Forever's in caps. We'll bring it and keep it to $99. Just raised it January 1st, as a matter of fact. Here's the website. You go to Edge Pro. That includes the trading room. That's what you're going to want, because the Edge Pro includes Edge Zone Bootcamp, which is order flow stuff, the trading room, a live workshop, which is like 7 live videos that we did in Chicago 2 years ago. Brett Steenbarger, Kepler, profile stuff, me and footprint and order flow things. So that's included. And then here's how you would enter the room once you subscribe. And then here's all the course material you get, 1, 2, and 3. And then you meet with us once a week. If you can't if you can't make the meeting, it's recorded in here. And I have guest hosts. I have all content driven. Also answer questions if there are questions. You always have access to me to be able to get questions answered and have some sort of routine that you're in a community. So if I let me do this here a second. I want you guys to see it. Without the membership, what you guys will see before you subscribe is this page. It'll tell you what you get: room, 3 courses, live weekly coaching, $147. I thought he said 99. When you hit the button and you put 99 forever down in here, it'll lower it to 199 and stay there. So you get the gist of what you're going to get. Patterns that have order flow and trap traders that define the dynamic of support and resistance. So when you look at a line in the sand where you think there's support, you never want to say why. You have a much better idea as to why if you watched the last hour. And then obviously watch the series of webinars and stuff, all going to one benefit: location. Fight for it. I'm in Chicago, Damon. Someone's asking where I'm based. Born and raised in Chicago. That's why I got started in futures, because Chicago has two biggest exchanges, CME and the Chicago Board of Trade. CME bought the Board of Trade. Now it's the CME Group. They used to be separate. Then the CME also bought New York Merck, which is where crude oil was traded. They bought COMEX. So CME Group is essentially the futures exchange in the U.S. And Eurex in Germany started electronic trading. Give you a history of electronic trading, where Eurex and the Boone contract pioneered trading on a screen, made the floors go away pretty quickly in Europe, couple 3 years in the U.S. But when I started in April 2000, all I had was all we traded was Eurex. U.S. markets were closed during the day sessions. So we traded the second half of the European business day around 6 a.m. to 10:30 Central. So like I said, I was home by 11 o'clock. And I went from making ready to quit the business. I'm telling you, at the end of this time, 1999, 20 years ago, I'm going to quit. My girlfriend, now my wife, says, stick with it. You know, we weren't married, didn't have kids. I lived at home. She goes, I got a job, support you. She bought me 6 months. Well, actually 4 months later, she bought me time. And that's when I met a risk manager at a prop firm. I talk about what a prop firm is in some of these videos. That's important to know the venue, the environment. That's what this site does, is it recreates a prop environment as much as possible. You're at such a disadvantage without knowing what a prop firm is. Such a disadvantage. Once you're a member, yes, I do, Alex. If you're an Edge Pro member and you're on Sierra, I'm going to provide my chart books. But the edge zones aren't, and the dials are not included in there. The dials aren't even public. They're only on I haven't put a subscription or something else out for them. I had them built. We're testing them. I really like them. We might, if we do, it won't be a very expensive subscription, 10, 20 a month. I don't know. I just want to make sure they work and not get too big into the software business. But the edge zones you could get, the guy who developed it takes care of it. I wanted to stay away from software. But you will get the chart books for everything else. And then they're on the software page on my website, Alex, you can find out more and take a trial to the edge zones. But yes, I just want to make sure you know that the chart books don't include all the zones. And only because I didn't get them for free either. But I didn't invent the footprint. Market Delta essentially did. I created the edge zones to make the footprint easier to read. The important parts of the footprint are edge zones, period. Anybody that tells you different probably is a plumber that watches CNBC every night. Any other questions? Did I miss any? Let me scroll up. Yeah, 99 forever, no space caps in the word forever. If you have Sierra, it's even better because, like I said, they make it real easy to share chart books, which are essentially templates. And by the way, for those watching in the future and you guys that are still here, which is everyone, and that is, go ahead, Damien. Everyone is, Sierra charts. Years ago, I thought you get what you pay for. It's kind of cheap. It's probably crappy. And maybe it was. But when I got turned on to them about a year ago, I was like, someone had told me, year and a half ago that was a busy, big trader that he was going to try Sierra. I said, really? Okay. I was shocked a month and a half later. He says, I'm going to Sierra. I said, you kidding me? I thought it was just a retail chintzy kind of software. So when he did it, it got my antennas up. I tried it late last year. I've been on it ever since. It's you get more for less, and you don't get more for less in many things in life. I think Ninja's fine too. I wouldn't disparage Ninja. I think that they've come a long way. But Sierra, I can't, I wouldn't go for just the price. It's stable when you got the right data. I like CQG data. I don't like any other data, but I think that it's not just what you pay for, because you don't want to go cheap on software if it sucks, but it doesn't. I thought it did. All right, Jeff, welcome aboard. We're closed till February. I'm just joking. We'll be open tomorrow. No, we'll be open Friday, Monday, Tuesday, Wednesday. Christmas won't be Thursday, Friday. And then between New Year's or between, what is it, Christmas and New Year's, I'm doing a lot of stuff for getting ready for next year and all the members and whatnot. In fact, I'm going down to Florida for a week. My wife said, why don't you go down and get all that stuff? She knows I always do a lot in the last week, the first week of next year, and the last week of a year for that year. She said, why don't you go down to the condo in Florida? And I'm like, okay, you want to go with? No, go by yourself. So you're away. So what am I going to do? Say no? The part I go to, I've been going since I was small, and it's like home away from home. I get a lot done, and your head's clean and everything else. But it's important to, number one, have the right community and group. Number two, never think that you could stop learning in any business, including this one. And know a good community from a bad one, because just because it's a group doesn't mean it's a good group. You know what I mean? But it's sky's the limit what you could pull out of this business. But everybody thinks it's easier than it is. And generally people have a false expectancy of how hard or easy it is. And then they buy a ton of education that's useless, meaningless. It's got to have, and I'm going to draw one more time, it's got to have order flow and market relationships. Nobody would deny that those are the two damn things you use to value the price of anything. So do it for charts and trading and everything else. You guys will like it. Speedometers I like, Bob. Thank you. It's not, it took a lot of time and effort and everything else to develop. I didn't develop it. Brian and our group did, and we worked on it together. It's a lot of time and effort, and they're not like, I don't like getting in the software business. So if we put it out for a subscription, it won't be a lot, but I want to make sure it works. And they have so far. They're really good. And I like them. And you got to use them. For me, the best way to use them is for correlations. Let me show you guys something. And I just built this new screen. Now, you know what? I don't want to show this right now because I'll get a lot of questions on. I'll do another webinar on the dials. I don't want to show it right now. But the thing, I'll say one more thing about the dials is you also could add a couple needles, Bob. One needle could be a different price, or it could be the delta. So you could have the delta and the dial with, I didn't reinvent the wheel, no pun intended. I'm just, the right stuff is what's important. The right way to use stuff. So you got an easy way to say, here's the delta. The delta is all the way to the right, which means it's aggressively bought, but price isn't. And that gives you the best chance to use it correctly. All right, let me get this off the screen. All right, any other questions before I run? It was a good session. I could tell by the questions and how people come and stay here. So generally that's the case. And I just always try to tell people that the best way to learn is through good stories and good metaphors, good analogies and good people and locations and the benefits of why it happened. If someone gave you a support line that worked every time you didn't know why, guess what? Even though you see it work every time, you'd screw it up. That's how crazy our minds are. So I'll leave you with this. Think about next time you see someone walking their dog, think about if they were walking their brain. Professional traders, we walk our brains. We don't let our mind walk us around and pull us around on a leash. Too many people do that in life. Too many people do that as retail, unprofessional traders. Don't let your emotions dictate your decisions. Put your mind on a leash and you pull it around. Like I said at the beginning, if anger is the emotion that gets you confident, you're in trouble in trading and in life. So I hope most of you guys join. I think many will. And we'll see you tomorrow, as early as tomorrow if you join tonight, 8 o'clock Central, and then you'll have access to all that material. Remember, the first couple lessons, though, if you join, the first one or two are pretty basic, so you could breeze through those. Watch the third one and then come to the room and watch some of those weekly coaching sessions. All right, guys, have a healthy and happy Christmas, and I'll probably see most of you that are in the room tomorrow. So long, guys.